Hunting for that magical genie with piles of cash? Join Candace and her guests as they uncover financial secrets, have a laugh at past mistakes, and savor financial rebounds. Thank you for listening. Let's dive in and do something today that your future self will thank you for.
Hello, everyone, and welcome to the Money Flow Genie podcast. Today, I want to talk to you a little bit about starting your own family bank. So what does that mean? How do you start a family bank, and what the hell is that anyway? So a family bank, and I say family bank, you could be a single person and you can do this as well. You do not have to have a bunch of people in your life in order to do the family bank. Although the more people are involved, the better and faster the momentum and the velocity of money your bank will grow. So what do I mean by family bank, and what does all that look like? You need to have a little bit of cash that you can set aside. $500 is pretty decent. You can even start it with 100. Now, the reason I'm saying like maybe hundreds of 500 is the fact that you're going to be taking that money and putting it into a high yield checking or savings account. Now, usually savings accounts usually are a little higher, but you want to be able to withdraw money out of that. So what are you doing with the money? So you start this account and you let the money sit there. But instead of it just sitting there and earning interest, you're going to be doing two things. You're going to lend that money back out to yourself. What does that mean, to lend the money back out to myself? For instance, often small purchases is how we will start. If you think about things that you purchase, which is with cash, or things that you purchase, particularly with your credit card, do you pay that balance off at the end of the month, every month? No, most people don't. Most people carry credit card debt. The average American, it's appalling. It's in like $10,000, I think it is. The average home carries in credit card debt. That's crazy. So what if you were able to do the same sort of thing as a credit card company, but for yourself internally? Now, in my previous podcast, I talked about discipline. Most people, if you pay your bills on time, or even if you pay late, but you pay your bills, often we will pay other people before we pay ourselves. So this is where the discipline comes in. So instead of taking your credit card and let's say you need to go and buy, let's say we have a bank of $500 that we've started our family bank with. You're going to, instead of going to the phone company or the server that you are buying your new phone from, because we all seem to have to go and buy these new phones every so many years because they don't work anymore. Instead of buying a phone for $500 and putting it on a card, of which then you're going to be, if you don't pay it off and within that time frame, about 30 days, you're going to start paying interest on that. But most people just get it through their provider. And they say free phone. Oh no, it is not free. They are incorporating the phone in your monthly subscription that you pay for your service. How do you know it's not free? Call them up after you just get a free phone and tell them you're going to end the service. They're going to charge you for the phone that you just got. And no, they're not going to refund you the amount if you return the phone because now it's used. So instead of giving them the money, take the $500, buy the phone outright. Now, and you can go to calculator.net. There's tons of calculators that are on the internet where you can choose a loan option. Put the interest in, put in the amount of the phone. Now, whatever interest you want to pay, don't do the 29% or 18% that you'll be doing for a credit card. You could, if you wanted to, if you're that disciplined, you can pay yourself back, but do it reasonable. So you're not like struggling. You want to pay off this phone. Say usually it's about 2 years. So go into the amortization calculator and pay off this phone, $500, a good amount of interest, 10%. That's usually what I do in my family bank. Put in 10% interest and 2 years, and it'll tell you what your monthly payment is. And then what you do is instead of taking that monthly payment that you would have been giving to a credit card, you're going to pay that into that savings account that you have lined up for your family bank. Now, it may not seem like much is happening, but if you do a couple of these loans, you're going to start seeing your principal and your interest coming back. The more that you lend money out, the more that you put money in. You see, this is the velocity of money. It's rolling and rolling. It's not just sitting there. You don't want the money sitting there. You want it moving. Once money comes in, if you have a certain amount, then send it back out. Now, how can you get other people involved? You can get your kids involved in this. You can start teaching them about money. You can start teaching them about responsibility. Do tiny loans. I highly recommend that you actually have some type of conversation before you just invite people to be a part of this. You want to invite people in that, one, aren't going to take advantage of money coming to them and then saying, oh, your family, I'm not going to pay you back. That creates a stressful situation. Sit down, talk about the finances, choose a book about finances, have some requirement. If you complete this, then you can participate in this. So for instance, you could get them to read a specific book about finances, about savings, about anything financial, to start getting their brains thinking in that way. And then you can bring them and say, okay, you've completed the requirements, just like an application, you would go to the bank, and then they can come to you with a loan. Now, you can request more information about why they need to purchase a product, but you can just ask simple questions. How are you going to pay it back? What would be a comfortable payment for you to pay this back? And the more people that you can get involved in the family bank, you can have a meeting. It will create an educational moment once a month, meet. If people miss a payment, don't beat them up. Ask them why. Work with them. You can implement late fees if you want, or you can just simply leave it as, okay, let's get you back on track. This is how you do it. This is what you're going to do. Can you meet these needs? Now, at a certain point, if people keep defaulting and defaulting, then just say, you're going to have to pay back the loan, but we're not going to lend you any more money until you pay back the loan. But if it's just you yourself, think about things that you purchase and put on your credit card and that you just may leave that balance on there. That's what you want to start implementing into your family bank. And if you sit down and you look at your credit card payments that you've been making over a certain amount of years, and you look at the interest of all of the payments that you've been paying in interest over just 1 year, think about that. You can put that back in your own pocket. But you have to have a tiny bit of money to start off with, and that will start growing. Give it a year, and you would be amazed at what this type of banking system will do. And also, you'll think twice. Do I want to put this on a credit card, or do I want to put this in the family bank? It's really interesting how your mindset starts to change. I want to fund this out of the family bank. So that's how you start a family bank, and that's the discipline that you need to do it. And then over a course of time, a family bank can get so large that you could actually choose to bring outside people. You could be a private money lender to a local contractor, someone that you know and have collateral, say like real estate. You could have collateral and be the first person on the mortgage of a piece of real estate and have it paid off in a short period of time. That's one of the things that you can do when you build that up. You can use your IRA, a self-directed IRA, just like a family bank, and increase your wealth into your retirement. Run your IRA like a family bank. So there's so many strategies out there. This is just one simple strategy I wanted to share with you, and it can get you started. Think about it. You can create your own wealth. We don't realize how much that we are taught like consumers in this country of America to just buy, but we're giving our money away, away, away. It's okay to consume, but what are you doing with your money before you purchase something? Put your money, funnel it through your family bank before you purchase. Purchase it and funnel it back in. Purchase and funnel it back in. The banking system. Make it be under your own roof. Remember, you are your own genie in the bottle. So join us on Facebook and watch us on the YouTube channel. And please like and subscribe. It would be wonderful to be able to bring more education to you and more people that are sharing their journeys as well, so that you don't feel alone in all of this and that we're all moving along at the pace in which we can. There's so much social media out there right now that we forget that not everybody has the money to start. And if you don't, there are ways you can do it, and you still can create financial freedom. It's just about changing a few things here and there. And that's what I'm here to guide you and hopefully give you some tips, because life happens. Like the other day, I put my glasses in the wrong place. My dog got them and chewed them to bits. It happens. I still love my dog. I'm just a little frustrated with myself because I put him in the wrong spot. But oh well, here we go. So I hope you have a wonderful day, and thank you so much for listening.
The info in this podcast is straight from our personal experiences. You alone possess the power to manifest your desires. You are the genie in the bottle, awaiting your command. So ask smart questions. We're not licensed financial pros, so be sure to consult with a licensed professional, attorney, or tax consultant.